Good day, everyone. My name is Standwa and I'm with the EasyProperties team. And today we have a special webinar featuring Bronwyn Williams. And of course, as always, my teammate, Rupert Finmore is here. Now, I'd like to just firstly introduce Rupert. He is the head of EasyProperties. He is the main man behind the whole show. And then I'd also like to have Bronwyn introduce herself. And Bronwyn always starts her shows by asking people to introduce themselves as how they would like to be introduced. Ditto to you, Bronwyn.
Thank you so much for inviting me today. I'm Bronwyn Williams. As I was introduced, I'm a partner at Flux Trends. And what we do is we try and help people to be more confident about the future by helping our clients to understand the trends that are going on in the world right now, and also hopefully giving a bit of insight into what could, what should, and what possibly might happen next.
Oh, lovely, lovely. And just to speak to that, the main aim of today is to sort of get people to engage with the changing landscape of, of property and tech and how they relate to one another. But I'd like to first hand off to Rupert, who shared some interesting insights with me before this chat kicked off. And he's also got a question for you, Bronwyn. So if you could help me out, Rupert.
Sure, Stans. Thank you. And Bronwyn, thanks so much for joining us. I think particularly relevant in recent times, anything that you can share with us that helps avert some of that anxiety is something that we all welcome. But yeah, I mean, just chatting with Standwa earlier, I mean, real estate by an asset class is often considered the biggest total asset class in the world. I think it's valued at north of 280 trillion US dollars, which is obviously enormous. And even our little residential market share in South Africa is valued at north of 5.5 trillion rand. And so it's an asset class that obviously has got a lot of interest, all of that. And I was just wondering, what are the couple of biggest property trends that you guys are looking at internationally and locally?
Okay, well, I'll start with one that's less positive, and then we can hopefully turn the conversation around to a bit more cheerful. I think that one of the big things that I've definitely seen over the course of the last year, and it's a trend that's playing out in all industry sectors, not just in the property sector, is this whole thing of winners winning big and losers losing hard. In other words, the rich getting richer and the poor getting poorer. And sort of layered on top of that, the back of that, you've also got these ideas around sort of the end of the ownership economy and more towards the rentier economy, as we're speaking about. And this refers to the software that we use and the cars that we own. I mean, if you get a new Tesla right now, you can't even use your car unless you pay for the monthly sort of software fee that goes with it. So there really is a sort of a shift towards the rentier economy. And I think that plays out very literally in the property sector too. I think one of the most disturbing statistics that I saw coming out of the United States, which does lead a lot of these macro global trends, is that 20% of the single family home residential retail marketplace is going to be owned not by individuals, but by investment companies sort of around about now. So even last year, we already sort of saw those really big investment firms. Last year in the United States, they bought up something like 300,000 single family homes, which means it becomes less and less easy for individuals to get onto the property ladder. And I think that's a bit of a tragedy because, you know, only if you have an ownership stake in the future, can you be optimistic about where your society is heading. And that's why the property market in particular is something that I've always been particularly interested in, because it becomes a self-fulfilling prophecy almost, in that when you invest in property, in physical property, it's a very fixed asset. It's literally like the definition of a fixed asset. You cannot take it with you. It's a long-term commitment, and it's also a long-term investment, literally within your community and within your society. You have to be an optimist to invest in property. You can't be a pessimist to invest in property. And I think that that's something that's quite profound for me too, coming from my background in economics, and how much expectations and things like optimism or pessimism become self-fulfilling prophecies. So if you are owning physical property, you are invested literally in the ground around you, you have a stake and an incentive to make sure that your society thrives, because then your asset thrives with it. It's very different to investing in a very liquid asset, which you can take with you, sell or buy very, very easily. So I do like to think of the property sector as being very much a bellwether of the future. And I think it's very disturbing that less people are being physically invested in their literal society around them. And I'd like to see that change, which is why I always really like the work that you have been doing at EasyEquities, which is very much about the ownership economy as opposed to the rentier economy that we're seeing trending at the moment.
Yeah, I mean, it's interesting you say that. Maybe a good bridge between the pessimism around that viewpoint and what we're trying to do at EasyProperties is create access towards ownership. I mean, a very good example of that is the 12 units that we've just invested in at Polo Fields. When you had 13,500 people actually put hard-earned cash into investing in that little physical corner of the world. So yeah, maybe that's the bridge from the pessimism to the optimism in that scenario.
Yeah, definitely agree. And I think that even what you're doing with the fractional ownership of properties, you're still having an ownership stake in that. It's still very different from renting. Owning a share of something is very different from simply paying a rent at the end of every month and not actually accumulating any ownership. You don't grow roots through that. And I think for societies, particularly like ours, we all know what's happened over the course of the last couple of weeks. A lot of that social unraveling and that breakdown of the social contract is because people don't feel like they have a stake in the future. And in order to have a stake in anything, in any real asset, you are taking on a commitment to take on the risk that goes along with that, because any sort of long-term investment does have risks, obviously, that come with it, but you're also getting a very real share of the reward. And when you have that reciprocal like responsibility and also reward is distributed across more of your society, you get people working together rather than working apart, because everybody has an incentive then to work together because everyone gets a share of things going right. And I think that's a very important concept. And I really do think that ownership in the sort of literal and figurative sense is key to fixing a lot of the problems that we see around us.
Yeah.
Awesome. And
I think carry on, Stans.
I want to jump in there and ask you, how are you feeling about are you optimistic about the future of FinTech and PropTech in SA and the continent? I mean, especially with this big gap in wealth.
Yeah, that's an interesting question. I'm glad you asked me it because I probably have a slightly different perspective to what many other people think. I think that we probably have too much FinTech and not enough money going around at the moment. We've solved a lot of the problems. And in fact, it's a saturated space. If you are a young entrepreneur that's starting out today and you're going to start another payments company, the only problem that you're really solving is the problem of how to sort of make more money for yourself out of other people's trades, right? And I think that I've been quite disappointed over the last couple of years to see how shallow our FinTech sort of society has been, particularly within the sort of Silicon Savannah and Silicon Cape and sort of South African ecosystem. How few really new solutions there are, and there definitely are exceptions to that. I know that you probably use technology, but you probably don't consider yourselves to be a tech-first company. And I think that's probably a better way to look at solving problems and using technology to help you solve that problem rather than focusing on the tech first and then trying to sell that as a service. Again, there are exceptions. There are people that are doing wonderful things in the space. I think Yoko is, of course, a great success story there. But we don't need another Yoko, right? We need to solve real problems. The real problem that we have in South Africa right now is a lack of money, literally. This is why we have calls for things like universal basic income, because people simply don't have capital to invest, don't have cash to buy stuff. A FinTech platform that allows you to transfer money from one place to another is not really solving your problem, right? So I think we have to be quite careful when we start seeing that. I'd like to see less copycat solutions coming out. And I'd also like to see us focusing more on solving real people's problems. And that's where I think the big competitive advantages are coming out. And that's where the big opportunities for entrepreneurship to really lead, particularly the African economy, is by investing in the real world around us. If you're interested in a bit more of those ideas there, I wrote an article with Ronak Apaldis from Signal Risk a couple of weeks back, or actually it's a couple of months ago now. We sort of identified 5 areas for investment in Africa, and in South Africa in particular, where there's huge opportunities to solve real problems. And they really speak to real things. That's like the ocean economy, the energy economy, food security. So I'd love to see more of that, and perhaps less people chasing the easy money in the FinTech space and more people using technology to solve real issues, if that answers your question.
It does. But so what I'm getting from you then, in the sense, is in the SA landscape, we're not moving fast enough to close that gap. I mean, there's just some things missing, and that's essentially what you're saying, right?
Yes. And this is a challenge that we've seen really as long as I've been in the world of business. I'm not that old, but I have been around for quite a few moons. And what we've really seen is that most businesses in South Africa have been chasing the same pool of money. And that's hugely dangerous. So whether you work in the FinTech space, whether you work in classic investment, whether you work in retail, whether you work in property, most people are chasing that infamous analogy of that FNB stadium full of our wealthiest taxpayers, right? So that's only a few 100,000 people, and everyone wants that money because that's the upper middle class money. Everybody wants the rich customer. Very few businesses have gone after, the whole 57 million of us that are left out of that bracket. Where are the businesses that are being developed to serve that community? And again, there are some very interesting examples of people that are starting to get into that space. Like eButler, I think, is one of the big case studies that we picked up last year that we just found was fantastic, because they were solving the problem of delivering food to people that live in informal settlements instead of just chasing after the normal sort of Woolworths crowd of customer. So I think designing solutions for the majority and not for the minority is where you start to build deep economies, where you start to get that sustainable growth, not just the sort of very extricative growth that comes from everyone chasing the same pockets and the same wallets and the same money recycling around the very small corners of our economy.
Great. And I actually want to just then take it over to Rupert and in a shameless sort of plug for EasyProperties in a sense. But I want to understand, Rupert, like, what do you think? I mean, where do you see EasyProperties' position in addressing that gap and being for the majority instead of the minority? And what are some of the friction points you found in us kind of addressing that as EP?
Stans, I suppose, and don't feel bad about a shameless plug. You're quite entitled to do that. I think the biggest thing is access. One of the major friction points in property and this cornerstone of this global economy is access to property. The biggest friction point in that is the huge amount of cash and outlay in cash it takes to get a foot onto that ladder, notwithstanding all the friction points that come thereafter. But the very first one is access to capital and access to opportunity. It's one of those instances where generally the best opportunities are available to those who are already well-heeled. And the majority of us are looking at retail opportunities, whereas the guys with significant balance sheets, get access to far better deals. And so I suppose EasyProperties is born out of the Easy Equities philosophy of providing access. And that is getting access to top quality property investments from as little as R1. I mean, it's that's the story.
Love it. And you, Bronwyn, I mean, I know you've touched on like eButler and the sorts, but do you also have like some other examples that you can give us of, FinTech or PropTech companies that you find are actually addressing inaccessibility to everyone?
Yeah, again, very, very few. But I think that the other interesting like local startup success story, which is always nice to talk about, is Digs Connect, which allows people to sort of rent their sort of spare accommodation out to students. That's kind of solving a real problem. It's creating a way for people to earn money in their own homes and with their own homes. I was actually going through my trend decks on property tech startups, and unfortunately, all the other ones that I used to really love and support, so many of them have gone bankrupt over the course of the last year. So I don't want to mention their names at this point in time, but I think it's a point that's worth making in that it's very, very difficult to get into the space where you are solving new problems in new ways. And we probably should be trying to support our local entrepreneurs as well as our local economy. I think that it's very tempting to want to invest offshore and to sort of, take your money out of the economy. We don't necessarily fully understand as citizens that every time we choose to invest in an American company rather than a South African company, we create less wealth in our economy and we end up creating more wealth outside of our economy. So we might be solving our own personal investment needs, but we're kind of shooting ourselves in the foot in that we are reducing the ability of our own economy to grow to that level. So my challenge to people listening here today would be to invest in property, to invest in stocks, to back entrepreneurs within your own economy, because that creates win-win cycles rather than sort of win-lose cycles where all of our best cash and all of our best ideas end up being exported and nothing ever really gets to grow locally.
Is this some kind of indication of people's needs kind of rapidly shifting and we're not able to sort of accommodate that? I mean, is there any insight you could provide on people's needs rapidly shifting?
Yeah, people's needs are shifting all the time, but basic things are not shifting. Basic things like the necessity to have a roof over your head, to have 3 meals a day, to have running water and power. I mean, these are very basic things, and we haven't even quite got those things right yet. Even in South Africa, we all know about load shedding. We all know about water shortages and day zeros and all of that. There's so many things that we can be trying to sort of fix at that very basic level. And that's why I like your sort of industry where you're dealing with actual property and creating roofs over people's heads. It's quite tangible to look at there. Again, I think that there are opportunities to create dignified, low-cost housing. If you are looking at the property sector in particular, I think it's been, we do a lot of low-cost housing developments that aren't particularly dignified and not particularly aspirational. I would like to see that industry shifting a bit, and I think there's lots of opportunities there. One of the sort of global trends that I've been tracking that I think that there are opportunities for smart entrepreneurs and businesses to get involved in doing it here in South Africa, because we have not seen it here. So we're starting to see big brands, either from the financial sector or from the fashion sector or from the retail sector, getting involved in the property sector and actually creating branded lifestyle living environments. So like branded apartment blocks. I mean, I think it would be great if you got like a local retailer to do like a retail branded apartment block for young people. I think it's a great sort of synergistic way to solve a bottom end need for a certain segment of the market and also to get your brand positioning out there as a corporate. So I'd love to see more of that sort of lateral thinking about how to leverage capital in win-win ways.
I think that's a really interesting insight. I'm sure you would have seen that article in the Financial Mail today about sleep little, live big, or whatever it was.
Yep.
Sleep small, live large. And while that's theoretically a new concept, I guess it's not really from the sense of if one considers a Melrose Arch, where there is traditionally been that live, work, play kind of environment. But again, that's an opportunity that was made towards the well-heeled. At 4 million or 5 million rand entry for an apartment, that excludes 99% of everyone in the country. What's really fantastic about what a lot of the developments we're seeing now is that with this kind of scenario, people are looking at well, I wouldn't quite say it's in that affordable space, but the more affordable space, you've got small 44 square meter apartments, but you've got access to all this amazing lifestyle amenities, pools, gyms, cinemas, squash courts, the works. And so perhaps that is a step in the right direction with what you are describing.
Yeah, and it can also solve some of our other problems in that we're having to rethink about what we're going to do with all our commercial office space as sort of work from home arrangements shift and the whole concept of what is work, what is home changes. We've got a whole lot of commercial real estate that is sort of ripe for repurposing one way or another, and that is a potential solution. I know Cape Town has done a few interesting things there and Joburg too with varying degrees of success, but it's an opportunity again to get brands involved in that space. So that branded living environment could be quite exciting. And we've started seeing a little bit of it. I think, in fact, there have been a couple of Instagram influencers, as much as I'm sure nobody wants to hear about influencers. Let's just say it because that's what's happening, where they've leveraged their personal brand into a personal branded micro apartments, again, targeted at their own fan base and their own sort of age group and all the rest of it, which I think is quite an interesting way to look at the future of how we live. The other thing to look at is how flexible those living environments are. We still tend to have a lot of our apartments being not just single family units, but individual units. And does that necessarily translate towards South African cultural dynamics? We have a lot of intergenerational families. Are there intergenerational family living arrangements that are affordable for the affordable side of the marketplace? Not a single studio apartment, but perhaps a smaller apartment with a few different rooms, that different generations within a family can live and play together. So I would also like to see, probably, I think there's an opportunity to cater towards families. And I think a lot of people have started to realize the value of family over the course of the last year. Again, trying to think about how to tailor towards actual needs within our community, not towards sort of an international idea of what a house buyer or a consumer would be.
And actually, you both touched on repurposing commercial properties into residential. And Rupert, I know that you're quite a fan of that, and we've seen some of that on EasyProperties. I don't know if you can expand a bit for our listeners on how that really looks and how that happens.
Well, for me, I think it's going to be one of the really interesting things to come out of this whole COVID space. You know, as Bronwyn's mentioned, you know, with people working from home and all these gargantuan properties in Sandton, these commercial buildings in Sandton, you know, the vacancy rates increasing dramatically. There's going to be a real interesting thing that happens there. The innovation that's going to happen with these properties is going to be enormous. I think that's something potentially really exciting. I think it's a case where hardship is going to have to promote this innovation. I mean, already now, Sandton is sitting with around 28% vacancy rates with residential units. So if all of these guys with these big commercial properties convert them into residential units, that's not really solving for a need. And all it's going to do is just further have a massive oversupply of property in that space. So I really look forward to seeing what all these creative people are going to do. Hopefully it's going to be young, creative people doing interesting, exciting, intergenerational stuff. But yeah, that's for me is the interesting one, where we are going to go with all of the space, because the answer is not just simply repurposing these buildings into residential units. It can't be.
No, you have to think of it more almost of creating vertical cities. And again, it's very different converting a commercial building in Cape Town, where property is a scarce commodity and where there is a demand and a need for affordable units. I mean, there you've got the sort of the wonderful apartments with the sea view now going for like R1 million or so, which is affordable to a young professional. That's exciting. There's an opportunity there. It's quite different in Sandton. People are leaving the city. Why would you want to live in Sandton if you don't have to work there, right? The only reason why you want to live there is so that if you have to work there. That's a very different question there. I think that we'll have to start considering more the Asian models about where sort of space becomes more of a premium, and trying to make fully comprehensive, as they're terming them, sort of walking or 15 minutes or circular cities. So bringing more sort of agricultural elements in, so you actually create an economy within that space. I think it's going to be more of a challenge for Sandton than even what it would be for Joburg CBD itself. So, you know, if you want to sort of bet a bit counterintuitively, if it's sort of contrarian take on the future of things, I think that you could probably almost be more bullish on Joburg than you would be at Sandton at the moment.
Interesting. So, I mean, for me, I'm going to point back to a property that we listed on EasyProperties, and that is Black Brick. That's one such case where it used to be, I think, Rupert, it was a beer distillery or something, or
Oh, it was the SAB head office.
It was the SAB head office,
Yeah.
And that was properly.
I think they were just distilling drinks underneath their tables, most likely.
And for me, I was a big fan of how they rebranded that and made it a lifestyle kind of vertical village for people to just, you know, live, work, and play from there. And so that actually speaks to Bronwyn's earlier point. But now I want to understand with this, and you called it the Zoom boom, Rupert, does that mean now we all need to just sort of move out of Joburg? I mean, does that not make things more scary for the investor, for people who hold property in Johannesburg per se?
Yeah, potentially. I mean, it's an interesting one. I mean, first of all, I didn't coin the phrase, but thanks anyway. But obviously, guys are, you know, they're moving to coastal places, more rural places where they perceive that the standard of living is better, cheaper, cheaper schooling, cheaper cost of living. You know, living on the coast and walking down to the beach for your lunch break rather than, I don't know, walking to the Woolies. There's obviously a huge amount of attraction for that. I think with all the schools that have been opened up in these areas, particularly on the north coast of Natal, it's close to Joburg for commuting, for those who have to. It's obviously having a big impact on the markets there. I know the KZN markets, interestingly enough, the Eastern Cape market are the best payers in the country from a rental point of view, and the KZN market has got the lowest vacancy rates, and I think that obviously speaks largely to that Zoom boom. Yeah, so it's an interesting one. So again, yeah, with people moving out of the cities, and again, you know, it's maybe coming back to what Bronwyn was talking about. It's that Zoom boom is maybe also just a 1% kind of thing. It's a gain for the well-heeled. This is not answering the call of these integrated cities, taking back the CBD, creating food farms, creating jobs and opportunities in these kind of areas. Again, maybe the Zoom boom is more doing the same kind of thing, promoting the same aspects with regards to, I don't know, that segment of the wealthy market.
And Bronwyn, have you seen this kind of trend as well in international property markets, would you say?
Oh yes, the semigration trend is huge, and it's been fueled not just by people moving to be in more pleasant locations while they're working from home. Now they've figured out they actually are able and forced to do so, depending on what your sort of personality type is, but also by all the vast amounts of helicopter money that has been sort of sprinkled into various different communities from various different central banks with various different degrees of generosity. We've definitely seen property prices increasing across various different suburban parts of the world. There's also a generational component there, in that the millennial generation, whatever you think about generational cohorts, facts are facts when it comes to a sort of a very big bulge of people all around about my sort of age, who have now made kind of enough money to buy their first property. It's generally cheaper to buy outside of one of your very, very big cities. I know South Africa's property dynamics are a bit different, and if you're wealthy, you don't live in a city, but in most other parts of the world, you did. That whole generation is sort of looking for places to put down roots now. They're also aging into money as their parents die. That's no nice way to kind of say that, but you're seeing this massive intergenerational wealth transfer taking place. So we're also seeing a large turnover in property stocks, and we've seen extraordinary growth in property prices in various different parts of the world. As much as you might think during a pandemic, property prices might fall, that's not exactly what's happened, because again, some people have got very, very rich from basically off the suffering of others. But again, it's not very nice sort of ways to say that. It's been a very unfair year. So we have seen certain sectors of the market benefit much more than others. And the property sector does tend to always do better in inflationary times, in that, again, like what I opened with, those whole sort of statistics of your banking firms and your financial industry tends to be sort of closest to the source when money taps are turned on. And quite often the first thing they do when they get access to easy money from central banks and through all the various different dynamics of the monetary market is they try and convert that cash into real assets before those asset prices inflate. So you do tend to see that the property sector sponges up quite a lot of that market money, and also why property prices inflate out of the sort of price ranges of a lot of young first-time buyers. There's a lot of dynamics for that, but the property dynamics have shifted quite dramatically this year. People are looking for more comfortable spaces to live. They're going to work and live at home, and if you've got the money for it, you're going to be needing a bit more floor space, you might be wanting a more scenic location. But again, that doesn't apply to everyone. It applies to a very, very tiny segment of South African society. And I'm sure anyone that works in that or is involved with the rental property market here has seen that our vacancies have gone up. Our house prices haven't really inclined as an overall market. They've inclined in pockets, in those nice sort of luxury corners of the marketplace. We do have a very uneven playing field there, but I'm sure you can tell listeners here more details to exactly what's going on there, because you are, after all, the professionals in this space.
For sure.
Bronwyn, I just wanted to ask, have you noticed any particular impacts or trends affecting the property market from a climate point of view?
Yeah, we have started to see that, but not again so much here in South Africa, because most of our country is water scarce. I mean, there's not many places you can move to in South Africa where you'd be immune from drought, and drought is the big climate concern here in South Africa. But globally, we've definitely started seeing some quite serious moves, even to the point that home loan issuers won't issue new home loans in certain places that are deemed to be climate risky investments. So what has really shifted over the course of the last year is a shift of climate concern from being an environmental issue towards it becoming an investment issue. And quite an interesting sort of case study we spoke about quite a lot last year was what happened in Australia, where a young man sued his pension fund for not investing in green stocks, not because he cared about the environment per se. His argument that he won the case in court for was that his pension fund hadn't diversified the economic risk of climate change in the portfolio they had prepared for his future. So that's interesting. Again, in Australia, you're starting to see the first waves of UN recognized climate refugees. That was in the sort of aftermath of that whole massive fires they had at the beginning of last year. So that's shifting where people are prepared to buy homes and who's prepared to loan you money to build there. You know, banks are not going to want to pay a home loan on an area that could get wiped out by a wildfire or by a flood. So low-lying coastal areas, you might have some concerns. Again, our sort of, sea cliff, on all the rest of it, our sea shelf into the actual sea makes those sort of risks a bit less risky. But again, water risk for South Africa as a whole makes probably our property market have a few interesting risks that perhaps we haven't all baked into our individual plans. There's always ways around it. But again, if you are invested in the land or in the property, you're invested in finding a solution, like getting involved in things like private water supply and boreholes and all those sort of related industries, or where there are a lot of opportunities, again, to solve problems preemptively before they do become issues that we all have to deal with.
One of the interesting things that I saw of late as well is with the changing climate in certain areas, is how some of the rights over properties are changing. The kind of governments or powers that be are enabling different set of rights over land, depending on that usage, which is an interesting one. And then also micro-insurance, they're actually starting to segment, you mentioned some of those coastal regions, actually starting to segment them down by kind of municipality areas, where there's obviously different insurance risks across these different areas, and how that micro-insurance industry is really growing from a property point of view as well, depending on the kind of climate, just literally differing between one municipality and the next.
Yeah, absolutely. There's so many risks that come into play there. And as investors, you've really got to pay very careful attention there. There's all sorts of other risks that people also pay more cognizance to. Like, I don't know if you have investigated too much what's going on with the whole radon thing in here in South Africa. So radon is obviously a radioactive sort of chemical that comes out of the ground and is generally found in older homes or in homes that have been excavated out of the land. So in other words, the closer to the core of the earth, the more risk of getting radon in your home. Now, in various parts of the world, not in South Africa yet, you can't sell your house unless you've got a radon certificate that says that there's not a high risk of radon actually giving the occupants cancer, much like you would have an electrical certificate on transfer of ownership. But it looks like we're probably going to have to start dealing with that here in South Africa, because older properties in Cape Town, through the Karoo, and in parts of Johannesburg, where properties have been embedded quite deep into the ground, do have quite eyebrow-raising levels of radon. They have been linked to certain forms of cancer. So like these environmental risks just get more and more complicated. So you always want to be kind of scanning the horizon there. The last thing you want is to think that this is not an issue, and then suddenly the law changes and says, actually, you can't sell this unless you get the certificate. If you don't get the certificate, you're not going to be able to sort of pass on that asset. So I think that there's a lot of those environmental questions we're going to have to start considering. Even things like termites that come out with changing climates. Again, that sort of weighs down the integrity of your building. Things that bugs that have been literally left asleep for many moons, maybe in a few centuries, sort of waking up as climate changes.
Yeah, well, I mean, it's a perfect time in the middle of a global pandemic to have one of these plagues as well.
Yeah, it's always a good thing to think about it, though, because that's the sort of silver lining on any sort of black swan or grey elephant, whatever you want to call it, event. It does rather focus the mind on thinking about what else have we been ignoring, or what other risks have we been perhaps avoiding thinking about, because nobody wants to think about these things, but they are things that you should be thinking about. Even in the rental property space, like, does your rental insurance, if you've got a tenant in your house, does that include sort of acts of God and things like pandemics if your tenant's not able to pay his bills? There's a whole lot of things we should be thinking about. Just trying to have a plan B's and C's in the back of our mind before things go wrong.
Yo, that is some scary stuff, guys. I'm shook here. So, but then you guys have mentioned some unavoidable kind of events and trends. And those ones are a bit like scary, but do you have any like more positive kind of unavoidable trends that you've seen in property? Actually, to both of you, Bronwyn and Rupert, if you can.
The most positive trend we've got in a country like South Africa, in the African continent, is that we have a youthful population, and that means there's going to be more people, more of us tomorrow than there are today. And that's good news for property, right? Because property is a fixed asset. It takes a long time to build, and you've got a sort of captive target market. People have to stay somewhere. So long run, you should be bullish on property in Africa because there are going to be more people that need a place to live. So we've got to sort of tap into our assets there. Of course, the threat there is probably more to do with, how our economy pans out and how property rights are affected further down the line. But there's a whole lot of opportunity to tap into there just in the sheer numbers of people that we can look forward to in the future.
Yeah, and I think, Stans, from my point of view, I'm kind of putting on my old real estate hat. I mean, traditionally, that real estate industry is a dinosaur waiting for massive disruption. It's a process that is incredibly slow. It's incredibly expensive, and it's full of like grudge purchases, which are probably like the most ripe places that you can have innovation and disruption. And so I'm really looking forward to seeing what other opportunities come out of that environment. I mean, there are one or two guys that are doing particularly well in that space at the moment, making the transactions infinitely cheaper. I mean, it's obviously a big erosion of capital wealth and the traditional costs in real estate. So I'm looking forward to seeing that. And just how innovation is going to take this really slow, archaic process, the length of time it takes to sell, the amount of paper you've got to sign, and the incredibly slow process through the deeds office and things like that. I think there's a lot of space for innovation for people to do some interesting things there as well.
Beautiful. Now, Rupert, side note, what's a grudge purchase? You're just speaking way above me here.
A grudge purchase is like when you go for a run with Charles Savage and he puts you at the post and you've got to buy him like a beer afterwards. That's a grudge purchase for me. But no, grudge purchase are those things like paying your insurance premiums and paying estate agent's commission and things like that. It just really hurts to put your hand in your pocket to do those. Interestingly enough, I mean, another cornerstone of the economy, and it's interesting to see how these insurance companies are going to react to all of the recent stuff. It's a grudge purchase until you need it, but maybe some of the estate agents' commissions is a bit more of a grudge purchase.
Got you. Okay, thanks for breaking that down for me. Cool, but also you had actually mentioned that there's plenty of disruption that can happen in property. Now I want to throw it back to Bronwyn and ask if she has seen any property and blockchain tech kind of, marrying into each other, and does she have any insights about the two kind of spaces combining, or if that's something that still hasn't really been tapped into?
Blockchain is one of those sort of buzzy type words. I do tend to err on the position that you probably don't need a blockchain. You probably just need a database. You need to cut out your unnecessary admin, and blockchains are a very clunky piece of technology, literally designed for private, anonymous, peer-to-peer money transactions. When you're dealing with real things, I don't know if we really need those. There's probably easier ways to solve those problems. The problems are too much admin, too much dead weight loss, too many middlemen, too many hands in the pie that are all sort of taking away from the value. I think there's other ways that we can solve that. I will just sort of ignore your question and talk about something else that I think is a valuable point because I think that there's a lot of hype around that, and I don't think it's going to solve our core issues. It's garbage in, garbage out. If you're going to put stuff into a database, you got to make sure it's going in correctly. Nothing worse than a mutable ledger full of junk data, right? So I think we've got to sort of solve the human problems once again.
Yeah.
The other thing that I wanted to just mention, because I don't know if we're going to be able to get to it otherwise, is that we speak quite a lot about technology and about things like smart cities and all the rest of it. We should probably be thinking more about humanizing the process and like building cities and buildings and things for people, right? So making it more livable spaces that are more organic and more human and less perfectly optimized with technology, particularly when it comes to the actual spatial environments that we're living and investing in. I think that there is quite a big danger of thinking that technology solves your problems. It doesn't necessarily. Technology is an efficiency tool, right? So especially when it comes to things like FinTech and PropTech and BlockTech and all the rest of it, it's really about sort of enhancing what you've already got going. It doesn't fix a bad business model. And unfortunately, it can also be used to automate inefficiencies or to perpetuate problems. And that's where a lot of issues that I can foresee from trying to adopt things like blockchain technology can become quite a big problem. So when you start trusting in tables and data and blockchains that have bad data in them, you can end up making a very big mess. And I think that our problems, particularly in our property sector, all the rest of it, probably start more around things like human corruption and perhaps less than efficient human behavior. And we should probably focus on fixing those things first before we try and sort of automate processes. We should probably get the actual pieces in the puzzle, make sure they're correct and functioning first. We don't want to automate inefficiencies and perpetuate biases and graft and all those other things that we know far too well in many parts of our industry across the world today.
Bronwyn, you're preaching. I dig that, especially the part about how tech is supposed to make things efficient. It's not a be all and end. Yes. Cool. So I think then you guys have dropped so many gems on here. And for people watching this on YouTube, they're going to have so much to like absorb and learn from. And I think that's, I really enjoyed this chat. So I just want to then start closing off, and I want to start with Rupert and then Bronwyn, if you have like any kind of last comments, and then I'll just finish off with some tips and some questions from the attendees. So,
thanks,
Rupert.
Yeah. No, I don't have anything really to finish off on, other than just to thank Bronwyn for her time. It's been really illuminating and really interesting to hear some of these insights and trends. So it's been really nice to have you on one of our EasyProperties webinars, Bronwyn. Thank you.
Thank you so much for inviting me. And then if you are interested in how to sort of humanize our spatial environments, I would recommend that if you've got the time, take a look at Jane Jacobs' The Life and Death of American Cities. I think that there's such relevant insights for the South African context, particularly when it comes to the property sector and addressing quite a few of the challenges we've spoken about today, like the hollowing out and the sterilization of our cities, how we've got massive spatial inequality between the rich and the poor. And her core message there is cities become places where you want to live, and property becomes valuable in cities, of course, where you want to live, tend to be diverse and rich. They tend to be cities where business is not segregated from where people live, where different classes of society, different wealth demographics are all mixed together. A good city that has good thriving property values like a New York or a Hong Kong is full of surprises, and it's full of people. So I think if we start thinking along those lines, we can start to think about more rich, more diverse property environments. And I think that once again goes quite a long way to enriching the ownership of our economies going forward.
Dig it. I love it. Rupert, we've got a few questions here that I think I should aim more towards you, because they're more on the retail investor side. So one of our attendees is asking, as a first-time buyer, should we be looking at developments that bypass or don't include transfer costs if you have limited access to resources, or it balances out regardless?
Yeah, I mean, you always unfortunately pay tax. So you either paying VAT or you're paying transfer costs. Unfortunately, there's no way to get around that. You'll see what we've put on the platform is a mix of both. And so one of the views of buying off plan is that you get your capital appreciation while your money's still sitting in the bank while they are building the development, is one view. The other view, obviously, is just to get your money into the property. There's less holding costs. Hopefully your property is appreciating more than the couple of percent it's earning in the trust account of the attorneys. Yeah, so it's either or both. You just can't get away with not paying tax, unfortunately.
Awesome. And then another question we have here, and this will be the last one, is, are there aspects of service design that go into new developments in terms of seeing developments that are more lifestyle based, with various amenities to keep tenants' lives easier, focusing on the customer experience?
So what was the actual question?
So I think they're asking is, are there aspects of the service design that go into new developments? Like, is that like, well, I'm guessing, because there is no question,
Okay.
per se, but it's just asking about the aspects of design that go into new developments.
Yeah, well, I think it's this, yeah, I mean, it's been a thing that's been going on for quite some time, is these mixed use developments. I think it's going to become more and more prevalent. I mean, we spoke about it a little bit earlier with these lifestyle estates being made available to more entry-level properties. Again, I suppose it's tying back to what Bronwyn was saying about the New York property market, with diversity and surprises all around and people loving and living in that city. You know, it comes back down to supply and demand again. You've got lots of happy people in the city. Your property prices are going to increase, and I suppose that's what a lot of these developers are doing at the moment, is not only offering hopefully a quality product for people to stay in, but really enriching that experience through the lifestyle amenities. And actually a lot of these properties now, these entry-level properties, are coming with schools and creches and the works. So yeah, I suppose if that's what the kind of comment was about, then yeah, definitely.
Love it. Cool, guys. I just want to then throw it lastly back to Bronwyn and ask, where can we find you and how can we follow you and get more insights from you?
Well, for all of our trends, you can go to the Flux Trends website. That's fluxtrends.com. Otherwise, you're welcome to connect with me. I'm on Twitter far too much at Bronwyn Williams. So see you around the internet.
Awesome. And as our community should know, you can find us on EasyProperties. That's or properties_easy on Twitter, but most of our social handles are EasyProperties. And we're all there, the whole community and the whole team. Rupert, Bronwyn.
And that website went live yesterday, that new website.
Oh yeah, that thing.
Yeah.
By the way, sparkling, beautiful. You led that really well. So make sure to check out our new website, guys. And I think that's it for the webinar, guys. I'd like to thank both of you guys for all the insights and the gems that you guys have dropped. That was like amazing. And you know, I've got so many notes here, and I hope everyone else, you know, finds it as eye-opening as I have. So from me, Standwa, from Rupert and Bronwyn, we'd like to thank you for watching. And yeah, if you're watching this on YouTube, please leave your comments below. Thank you so much, everyone.